Testing 1 2 testing. Testing 1 2. Good morning, everybody. This is Patrick MontesDeOca. Bear with me here. We got a really fast market in gold here. So I'm trying to brace myself here. And also my traders that have been following me here, if you have substantial deep profits in here, use this rally to lock in your profits. Or trail it with a stop or hedge your position up here as major targets have been completed in gold and silver for the short term. For the short term. What we want to see is basically how the market trades around these levels here. But in the meantime, if you have any substantial profits here, this is a good time to be hedging it, particularly with dust, without necessarily getting out of your situation, liquidating your long position, your core position, stay long. And look to trade the market short term. If you have deep profits here, obviously reduce your position, pull your principal out, and let the profits run. We're going to watch the market here as I have some heavy trading here that I need to do. So bear with me here. I'm pretty much applying the same strategy that I'm recommending to you on my personal account here on the house account. In this kind of a situation here, the possibility is that the exchanges are going to increase the margins on the positions. So you want to basically, cover any long positions that you have, any profits here, as the increase in margins here could precipitate a pretty substantial correction in the futures markets. And this is how pretty much the CFTC controls the futures markets, is by increasing the margin requirements whenever the market gets out of hand, so to speak, or overheated as it is right now. The question is basically, is the big money going to continue to support the market as opposed to the little guy, which is what has precipitated pretty much this momentum, which has been a long waited for the short sellers basically to run for the hills. What we have here is the potential of a short squeeze in the cash in the silver market. And the only place that you can go and buy now is in the futures markets without having to pay a substantial premium in the cash market. So the futures contracts obviously are subject to tremendous volatility based upon an increase in margin requirements. And this is the way pretty much, again, the CFTC controls the volatility in the futures markets, and that at any time they can increase the margin requirements to 300% to reduce the weak buyers that essentially are driving this market to these levels here. So I think what you're looking at, and I'll tell you, this is amazing for me because I've been around this block, so to speak, for a little while here. But I have never experienced the small retailer, which I call the David of the market, go up against the Goliaths of the market, which are essentially the central bankers and the hedge funds. I think what is happening here, in my opinion, is that the sentiment of Main Street, ordinarily what it's called the retail investor or the small investor, is experiencing a leveling off the playing field against Wall Street, against some of these hedge funds, that they have the power, or have identified to have the power, or have become a significant force to deal with in the markets. Contrary to the past, where we've seen short selling pretty much as a rule of thumb, and particularly in the futures markets, if you go back to 2012, when they eliminated the uptick rule from short selling, it created this whole market that essentially became a predatory environment, where these hedge funds, central banks, were able to sell far greater amounts of the product that was underneath. In this case, for example, in the silver market, the central banks, for example, right now, according to the Commitment of Traders report, are short in excess of $35, maybe $38 billion in the futures markets. So when you get a move like today in silver, for example, where we had a $3 move, and we're looking at, we touched $30, they're beginning to feel the squeeze. They're beginning to feel the pressure, because they can't control the market anymore. They have lost the momentum of short selling for the time being. And so the question remains whether they are going to get help from the government by the CFTC, the regulatory body, pretty much raising margins requirements. And this is a good way to wipe out, you might say, the weak Nellies in the market, the weak buyers in the market, and precipitates some incredible buying opportunities. Obviously, after the washout has taken place, the big money comes in and picks up the cash market, continues to pick up the cash market. They've been doing that for many, many years, until now, where we have this David awakening, this giant buying power awakening, pretty much challenging now the practices of these short sellers that essentially were given a carte blanche by the fact that the uptick rule was eliminated. The small investor has found a way, thanks to the technology now and the social networks, to create a momentum-driven base that is, it's got to be reckoned with. When anybody, institutional or small retailer or an individual, home office or individual pension fund or whatever can move the market with such velocity means that, again, if we go back to the basic law of supply and demand that I talk about, this huge buying going on that is taking over the supply being offered right now in the marketplace. You can see it by the market momentum, the action. And all I got to do basically is take a look at the supply and demand as I tell you that the VCPMI gives us the tremendous prospective view that, for example, the 1874 is the monthly average price, and it's also the sell one level weekly. It's also the sell one level of the daily now as we come in. And what we want to see is how the market behaves, how the supply and demand behaves in this area. So it is a challenging area to get through. But I think if we have enough volume to get through here, even though we are entering into an area of distribution of supply on the daily, that pretty much alerts you that, you know, you take your profits if you were long 1973, and for day trading purposes that, you know, you don't do anything here if we complete this target. And then we'll take a look at the monthly average, which right now is the resistance, the equilibrium level, so to speak, that if we were able to get the energy above 1874, it would be very bullish, creating a bullish trend momentum, and also would be entering into the distribution area of supply. But the daily signal can still go up to 1894, which is the sell to level, and it's got about a 95% probability model to the mean, which is 50. So at sell to level, it is a 95% relative applied volatility to the mean. And that essentially means that this is a high probability area that, depending upon the market and how the signal is activated, that we could see a reversion occur. With the monthly now trend momentum bullish, it's activated the 1900 level, okay, upon the close above 1874. And this identifies the prospective looks that we have in terms of targets. And I think realistically, looking at the weekly, there's a very high probability, I believe, that once we get through this 1874, and it, you know, with this kind of a buy-in that that I see happening here, even though we got a little bit of profit taken here at the beginning, at the opening here, we probably are looking to challenge those prices there. And upon, again, trading above 1874, I think we're going to get another wave of buyers, momentum buyers, that come into the market, because the momentum shifts once the price reaches through the pivot point or the targets that we're looking at. Let's continue to watch the market here as you see this phenomenal move taking place, which is probably breaking highs in silver in particular, about 8 years, 8-year highs, and we are finally beginning to see the silver market taken pretty much, I think, the leadership in the precious metals here. But it is in an overbought condition, and if you've been riding this this wave, this up wave here, you know, down into that 26 level here, that the VCPMI indicates buying, which was around the 28th of the month. And, um, you know, we recommended, in fact, and also published in the Associated Press in Seeking Alpha. The latest report that was published this yesterday in the Associated Press and Seeking Alpha basically is about the silver market, and it's entitled "Short Sellers, Your Time Has Come to Pay the Piper." The volatility has increased to a point that it is unlike anything in living memory. The playing field has changed in relation to the application of technology. And this is a report that was published in Seeking Alpha here, and I wanted to share with you. Um, a podcast that we are publishing. And I wanted to show you a preview. This is the Equity Management Academy weekend podcast report for January. Testing. Testing 1 2. We're back here. I'm sorry we're having some issues here this morning. The internet sometimes is unpredictable, just like these markets, I assume. But testing 1 2 1 2. Testing. Are we back? Yeah, it's a fast market here. Conditions. Let me concentrate here on trading. I wanted to share that audio with you, but I'll have another chance here. Let's concentrate here on the markets and see pretty much what we can do here this today. As I said earlier, the 1874, 75 seems to be the equilibrium, the average, a pivot point that is very significant in determining whether we have seen a ceiling of resistance overriding, you might say, the buying demand up here, or if we get a close above 1874, it's going to be pretty bullish for the momentum of the market. We got a little bit of resistance up into that 1872 area from Bollinger Bands. The extreme level above, I believe, but we're right into resistance, and so that we can expect a little bit of supply in here. But as you can see below, even though the market reaches some of these extremes, it continues to move in that direction because the momentum is bullish. Now, what really is important is that, again, as a trader, and this is what I do, even though I have a core position that I'm maintaining, and I've been suggesting for you, if you've been following me all this time, to keep, that you don't need to liquidate, that you want to add to on any corrections in these markets, that position has increased in equity tremendously this morning, as most of you are experiencing that. So what we are looking at here is a little bit of volatility coming into the market. And let's take a look here for a minute. The Reddit move that's taking place right now with GameStop and Reddit and this social network, applications here. seem to be creating this momentum here. The premiums, I'm being asked if this is a great time to be buying physical. And I'm not so sure that this is a great time to be buying into it if you didn't buy it before, because the premiums are just skyrocketing here. And also, there's no physical available. Now you're going to have to wait, a few weeks, a month, or maybe even longer to get delivery on the physical. So there's a squeeze that's going on in the physical market here, and I'm not sure that you want to pay that premium at this point unless you desperately need to have it. But I think again, these levels, we've been recommending here for the past few months, since December in particular, to our clients here to take advantage of this. And I think we've come to a point where, this is where we've booked some good profits in this move up here. From 1800, we're looking at about 1874. That's a $74-$80 move. That's a nice profit range. We don't want to chase the market. We want to buy at the extreme below the mean, where the high probabilities are to buy the market, which essentially, as you can see here, are in the blue area that is identified by the VCPMI. The blue area is the area where it identifies the highest probabilities to enter the long side of the market. 1832.40 was the beginning of this move up that has completed the targets above and potentially at the extreme above the mean. It did complete 1872, went up to 1878. So we are trading, reverting from the monthly mean back down to the weekly mean, back up above, activating the monthly mean. And what you see here is the market trading in an area that has been identified as a daily, weekly, and monthly average price. And trading above the daily average price, trading above the weekly average price is very bullish. And it completed the target of the monthly mean, the monthly target. Now, trading above the monthly average price of 1874 is going to be, I believe, explosive, simply because it's bringing in the daily, the weekly, the monthly momentum of the market and activating now the sell to level of 1894 on the daily and $1,900 for the weekly targets. Prepare for volatility, unlike you've never seen before. And what I would recommend to those traders that are looking at this point, at this level here, don't chase the market at this level. Wait for a correction to allow you to come in, or unless you have a strategy where you want to get into the market, where you have a certain capital that you need to deploy, and what you want to do is you want to scale in. Maybe start 10% here, 10% lower, set levels that you can buy, you might say, if the market does enter into a correction. As far as day trades, you don't want to chase the market. So trading pretty much around the average price here, you can see is going to be a bit choppy, and ideally, what you want to do is let the numbers, let the code identify when the price is in blue. I think what we have seen here truly is a transformational change in the paradigm of pretty much the players in the market. When you can get some small investors to be persistent in following their goals, their strategies. This can happen. And particularly in the silver market, has been manipulated by the central bankers, as I was saying earlier, by the fact that we had this uptick rule was eliminated back in 2012. And the market has been in a manipulative, you might say, correction. If you look back at 2013 or so, the market has been pounded constantly anytime that it's made new highs by record amount of silver short futures contracts that exceeded in some cases about 10% of the production annually. If a regular trader, or I or you or a regular trader was to do that, it would be in jail. It would be considered manipulating the price. And pretty much this is the same thing that happened to GameStop. Some of these short hedge funds were short up to 150, 130% of the stock. So is the value of the stock fundamentally valued at 500 or whatever it is at the high? Some people maybe seem to think, and you got to think about it in terms of, is it a speculative play? Is it going to be short-lived? And when is it going to end? How is it going to end? I think you got to take a look at just the way things are in this business, that whenever things get out of control by the regulated body, so to speak, in the futures markets in particular, they raise the margins to control the frenzy. And only the big money, the big players can stand those increases in margin requirements, that are prepared for that, because that's their purpose of using the futures contract, is to buy through the futures contract. So they allocate that amount, if it's a futures contract, one contract, to take 100 ounces, they allocate that money, segregate that money, so that if they need to, in times like this, they can easily come up with a margin. They already have allocated that. For the retail investor who's on margin, where you're taking 10-to-1 margin, all you need is a 10% move in the market to wipe you out. I mean, it's basic math. So a lot of these traders that are coming in here, you want to be careful that you don't over margin yourself in the futures markets, that you can buy an asset that you can hold, and you can hold a stock, you can hold an ETF. If you want limited risk, you can go into the options markets. You can place yourself in the options markets and reduce the risk in that fashion, and manage the risk in that fashion. But the futures contracts is a very risky proposition. And for those that have not traded in the futures contracts, you want to be prepared do your work, learn what risk is, what margins are, how it works. Again, because not just the fact that you can buy, a futures contract by, let's say, putting up simply the margin, requirement that each broker house requires for that is the only risk that you carry. And I think what we're looking at is because of this tremendous volatility increases that we've seen recently here, it would not surprise me for brokerages and financial houses to begin to increase their financial requirements as well. As it always is, it becomes a game for the rich. It becomes a game for the ones that can afford to do it. And, one of the things that I've been trying to convey here by doing this incredible live streaming show, thanks to TikToker, is to be able to share this intelligence that ordinarily is not shared with traders. That you pretty much can come in and you can see what a professional, who has been around for quite some time uses in real time environment. You can see in real trading, and you can see the gains, you might say, that potentially can happen in this market here, which can be far above any instrument. Let's take we're gonna go flat here on silver, and we're gonna be locking in some profits here that we made here. If you've been long, I think it's fair to say that this is a great time for profits. We got the targets completed on the weekly in silver, and we're going flat. We booked $34,615 here, and if you were following this is probably what you would have made, regardless of whether this platform is simulated or not. If you're a self-directed trader, the trades that I do here, I execute them. I follow them in a real account, but I'm sharing this with you for educational purposes. So depending upon your profile, this is pretty much what you could have accomplished here. In terms of the signal here, we're going to be taking the short signal here in silver for a time being, and continue to hold the long derivatives positions. As I've been saying, possibly, we might be getting a little bit of a profit taking here as the market made a high of 30.35. Some profit taking is coming in here. To all my traders in the private trading room here this morning, I want to recommend here to all my traders in Discord, lock in some profits up here to hedge. As I've mentioned here, I think it's time to lock in and pull some profits in here. And if you want to trade the market from the short side, if you want to take the risk, obviously the signal here in silver has activated a short trigger, and the initial target is 28.61. 28.32 is the sell one level, that is the support. So let's watch this straight here and see how it treats us here. We just pulled in about another $2,100 on that on this day trade here, so we want to book that as well. Just go ahead and book that short trade here. We're up to 36,090 in profits here in day trading in the futures markets. This is fast market conditions, so you want to be acting really quick and do not pay, do not lose attention to it, because this thing could just snap back real fast. So quick buck. We're up to 36,090, and we are carrying derivatives as well on our core position. We are holding a core position that we want to keep, and we are using the short-term opportunities that the market has given us to trade the market short-term. The only signal that we got this morning was pretty much on the silver, and we just covered that. Regardless of, the targets here, I'm in it to make money. So if I make $2,000 in a matter of minutes, I'm going to take it. This is what trading is about. And this is, again, the volatility that we have right now. It makes you feel like a kid in a candy store, because trading is incredible in this volatility if you have the tools to do it. And you got to be willing and prepared to act on it immediately. You can't be second guessing. You can't be judging, wondering, what other people are doing, what the internet is saying, what CNBC is saying. No, you got to be your own man and make your own decisions. Once you get this data, which is really the incredible thing about this data, is that it gives you a prospective look for you to be able to trade. So if you came in long, this told you at 29.57, book some profits if you're coming in long. And if your strategy is short term, particularly short term. If it's long term, you can use this either to lock in some profits on that long term look, or hedge, or pretty much a right premium against it and generate some credit against it, which is another way of trading the market without liquidating your position. Particularly if you're coming in here with in a long position in options, net calls, so to speak, you can use you can sell out of the money positions against it. The question is that you don't want to sell, during an explosive move in the market. And what I'm trying to define here is, obviously, is this move of that nature? Is it going to continue to expand, or is the buying that took place going to be short term, and it's going to die out? For now, we're getting a little bit of continued profit taking from the sell one level of 1872 was activated several times, as you can see in here. We're coming back down almost to the low end of the Bollinger Band, the extreme low. And for those that are looking to enter the market, this could be an area, one of the areas, or possibly the market coming down to test that daily average price of 1857. For silver, it's 2861. We continue to see profit taking, bringing the market down into the low end of the Bollinger Band, which should bring some short-term support. So I'm comfortable where I am, and I think that once again, this area that you see in green, so we're looking at a potentially choppy area between 1874 and 1844. And in between, we're looking at the daily 1857. So it's an area where you see we have established a trading range with a ceiling at 1878 and the bottom at 1844 for the time being. And so are we going to be trading down to 1844, after this rally here, completing this target and activating a sell one target? So far the VCPMI is saying that the monthly is short from 1874, the daily is short from 1872, and the target is 1857. That's only about $4 from where we are. Possible that we could see that today. So if you sold, these are the targets for us to let the market identify for us the strength of the buying that's underneath the market. That's what we're talking about basically, is the buying, the supply and demand exchange. Is it, is the supply greater up here at 1874 than the buying, that's occurring? And so until that buying super exceeds that selling pressure, it's going to reflect in lower prices. And what the code does basically tells you 1857 is the equilibrium price. It's the aim of what this move might be anticipating to do. we're looking at silver. It's come down obviously quite a bit from the highs. Platinum, most of the metals, the derivatives as well, have taken a little bit of profit. Whenever you get a move like this and you get this markets up 12%, particularly on the derivatives, that can happen. You don't get these kinds of moves every day. And what we see in today here is the market breaking 8-year highs. Now, is it expected to see a little bit of profit taking when that happens? Possibly, as it is, unfolding. Obviously, is the move up over, as some people may start to sing on the internet about? I don't think so. Prices are just beginning. What you're seeing here, it's just the beginning of the next most explosive bull market in precious metals. The giant has awakened pretty much, thanks to Reddit, thanks to Wall Street bets. It has opened up the opportunity, which I've been saying here, for you as a self-directed individual. You can make a difference. Reddit is a proof of what can be done. And technology is giving you the opportunity to change your life, unlike any other time in the history of this market. When you can sit here and watch me trade live and produce the results that I am producing here live, it is truly a remarkable technology or technological development that, for you as a self-directed individual, with the TikTok platform that we have, where you can get access to some of the best leaders in the industry, you have the odds on your side as a small trader or as a self-directed individual. And trading in these markets can be treacherous if you do not understand or have the dynamics of risk and money management pretty clear. What I'm showing you here is how this intelligence can be applied exponentially into derivatives, futures contracts, stocks, options, very successfully. The VCPMI stands for the Variable Changing Price Momentum Indicator, and it identifies for you the extreme levels above or below the supply and demand structure, daily, weekly, monthly, annually, and cyclically. It identifies the momentum of the market prospectively, and it identifies when and where those probabilities are for the market to revert. It's a GPS for your trading, and depending upon your profile, you can take advantage of it. Once again, ladies and gentlemen, thank you for allowing me and the opportunity to have this platform to share this incredible information and intelligence with you. And I do believe that, I hope you are benefiting by this like I am, like most of my subscribers are that are following it. But in the meantime, please watch your margin, watch your risk. You take care, and I'll talk to you soon. Take care.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Steve Collegian here with John Najarian, folks. We're at Master